Hey guys, this is Shaib Mama and welcome to Crypto Mama's channel. Today we are taking a look at long-time multi-time frame analysis on Euro USD, and we'll be using the weekly and the daily chart to do this particular analysis. We'll also go into our COT report to look at how commercials and non-commercials are positioned in the market. So by looking at the major structure the market is currently creating in the weekly, we have a market that has created this overextended M4 pattern. You can see it here. And I always do, anytime you see an overextended M pattern, you should expect two things. For the first one, you should expect is a retracement to the low of the M, which we have already accomplished that. And the second one you should expect is a deeper retracement to the neckline of the M, which the market is looks like it's currently trading to. So when you see an overextended M, these are the two things you should expect the market to do before a further continuation to the main direction the market has created. So, and when you come to the micro structure here too, you can see all this leg come to the downside. This was the last low the market created and changed structure to the upside. So after the market has changed structure, we expect the market to start taking out all the supply zones that has been marked here. So expect the market to start taking out all the supply zone until we reach an area there's too much supply in the market that will force the market to do what? To shift structure once again and start trading to the downside. So at least we should expect maybe something like this to happen, trade with this area, maybe change structure, and we start trading to the downside once again. And when you also come to the minus structure the market is creating here, the price action the market is creating here on the weekly, we have a market that has taken out the buy side liquidity here. But taking up this buy side liquidity doesn't mean anything on its own. You understand? It doesn't mean anything until we see shift in market structure in our 4 hourly time frame, which has not yet happened. So let's go to our daily time frame and see what is happening in the daily. So by coming to our daily time frame, you can see that what looks like a patch of buy side liquidity is actually a breakout, because you can see this candle actually closed above the high of this candle. So we can expect a continuation of the bullish trend to our neckline of the M pattern we formed in the weekly chart. So let's go to our COT and see what is happening in the COT report. So and when you come to our COT report, when you come to Euro USD on the COT report, when you are analyzing the COT report, the COT report comprises of two main characters: the speculators, who are actually in the market to make money, and the hedgers, who are in the market to hedge against currency risks. And the speculators are what they are trend followers. They keep adding to their longs when the market is going up, and these people, they keep reducing their longs or adding to their shorts as the market is going up. So these ones follow the trend, and this one trade against the trend. These ones are in for profit, and the hedges are in just to hedge against currency risks. So these are the people we are most interested in monitoring their order. That is the speculators, because they are people like us. They are people who are also in the market to make money, just like us. And when you currently come here, you see that they have been increasing their net position. You see, from 49 all the way to 75% longs on Euro USD. And we are currently having a positive net positions as well. But just by looking at these percentages doesn't mean anything. We can have a net long percentages whilst the market is trending down. Let me show you an example. You can see GBP USD. You see GB from all this area here, longs has been always been less than short. But when you go into GBP USD, you see that the price is trending to the upside. So just by looking at the absolute percentage figures doesn't mean anything. It doesn't actually communicate much information in analyzing what the COT report is currently doing. But with that, we will go into analyzing our ratios. So let's go to Euro USD. Oh, sorry. Let's go to Euro USD. And by analyzing our ratios, we have our oversold area on our orders and an overbought area. Sorry, this is our overbought area and this is our oversold area. And this, when you come to our Euro COT index 2, this is our overbought area and this is our oversold area. So between these two areas is where major turning points happens in the market. You can confirm that from the chart. When we come here, you can see on this date, this was 19th January 2021. So let's go to the chart and I'll show you something. Let's go to the weekly chart because this one too is released weekly. 19th January 2021. So this was what? This was 4th January 2021. So you can see that the market peaked 2 weeks before the others peaked. And when you also come to this area here, this was C4th September 2022. And you come back to your chart. Let's go to 2022. You come back to your chart. This candle was created on 26th September. And this was the last low, 26th September 2022. So you can see this one too, our orders peaked 2 weeks earlier before the price actually peaked. And when you come back to our analysis again, you can see that currently we are trading at the peak region. We are trading there. We are trading there in our Euro index and we are trading there in our ratios as well. So our orders has peaked, but when you come to price keeps continue moving up. So price has not peaked yet. Price can move all the way up to this region. Orders on COT has peaked. So a reversal or a possible reversal is near. So from here, the only thing that we are interested in, when you see the orders has been peaked, the only thing you are interested in is to wait for a market structure shift in your daily. So from the daily perspective, until we have a close below this low, we will not be looking for longs. Sorry, we will not be looking for shorts until we have in the market trading below this low here. Then on the retracement, we can then start looking for shorts to trade in the direction the COT report is currently pointing us to, because our COT is telling us that we are in an overbought region on both our index and the ratios. And but price is currently pushing upside. So until price align with our report, we are not interested in short as at the moment. The the reason is that the report comes out every week and speculators have big money. They are those who move the market. So at where their orders peaked and where price peak cannot be exactly the same, because they need a lot of money and a lot of manipulation to move price in the direction they want price to go. So their orders can even peak a month later or 2 months later before price will peak. All what you need to know is to be on alert that we have a peak on our ratios and we have a peak on our index. So the next thing we are looking for should be a change in price movement. That is a price switching from bullish market to a bearish market in your daily before you start looking for entries in the direction of where the COT report is currently pointing you at. But currently, you can see even in our 4 hourly time frame, everything is bullish. So until we break below this low here, we are not interested in any short position until we break below this low, because we still have a level in our weekly. We still have this neckline M in the weekly, we can equally go on to mitigate before even pushing to the downside. So thank you for watching this video, and I'll see you in another video